It is July 30th, 2025. My name's Matt. Welcome to Team Bitcoin, covering the latest Bitcoin news. Encourage you to stick around to the end because that's where I show you how I'm personally profiting from my trades. Let's start with Bitcoin price. Today was a big day in the market. We had the Federal Reserve deciding what they were doing with interest rates, and they held firm like 99% of the pros thought they would. We're not ready to start slicing rates, contrary to what the president's saying. So that is coming. But initially, I was watching Bitcoin real time, and it started going down like $800, $1,000, $1,200, $1,400, and then it bottomed at about 116, and this is right here, and then it started grinding back up. Now, Bitcoin's had some crazy resiliency, and if you fan out to like a 1 month chart, we're still up 9.25%, but you see this trading range between 116 and about 120. That is a very tight time frame to be grinding around for the last 20 days. So it kind of supports my thesis that I've been saying previously that, hey, we're just trying to exhaust the sellers. We're grinding around. No one really anticipated a rate cut this time around, but they do in the future, and that would be held as a positive when that happens. Next up, Bitcoin option exposure. This is the first article that I've actually seen that really highlights exactly what I've been showing you time and time again in my videos, which is Bitcoin options exposure tops 57 billion amid soaring institutional hedging demand. So institution is trading options or derivatives around Bitcoin, and I've showed you in previous videos exactly how I'm doing it, and I'm making just stupid money doing it. So I got to ride the gravy train as long as you can, and I'm showing you actual examples of those trades. So if you haven't seen that, go back in my previous videos. Essentially, according to the block data, Durbit, I'm not familiar with these guys, but they dominate the landscape with approximately 45 billion in open interest, sophisticated Bitcoin's derivative trading. I gotta tell you, it's not that sophisticated. It's really not. A third grader can do it. You just have to tune into my previous videos. But if you're new to options, then it seems a little complicated at first until you've executed your first trade, and then it's not that big of a deal. But I love seeing that I'm not the only one doing this. Apparently the pros are doing this. So this figure excludes the rapidly growing Bitcoin ETF options market, which I am a part of. And then they specifically highlight the BlackRock IBIT fund along with some others, and that alone is like an additional 7 billion in open interest. So crazy, but those products are available now, and love them. For me, it's like when the NASDAQ, the triple Qs came out way back when, like 25 years ago. That's how excited I am about IBIT, and I'll keep spinning that. So next article, CoinTelegraph. 21 Capital, backed by this guy and Tether, may be issuing US dollar loans using Bitcoin as collateral. Now I can tell you I'm working on something with my bank, and part of that is they're looking at tax returns, they're looking at my assets, they're looking at my income and my debt, and they're deciding how much money to loan me, which is essentially a HELOC against one of the properties we own. Now here's what I would say. Nowhere in any of that are they asking for my Bitcoin stuff. They won't even recognize the value of that, which is insanity. So you're going to start seeing more of these companies popping up, and banks are slow to pivot. They're not yet recognizing it as an asset per se, and they're not counting it against loans. So these products are going to continue to pop up, especially as Bitcoin keeps going up in value, because people don't want to sell their asset, in this case Bitcoin, and incur the tax obligations. That's a timing thing for a lot of people, and you really need a tax advisor to pony up and show you the best way to approach that. A lot of people don't consider that, but they should. And so the rich, the ones that really know, that have fiduciary financial advisors, which I've preached in the past, will guide you through that process. And so again, 21 Capital eyes the deficiency in banking, and they're starting companies specifically to address those deficiencies. Next up, sorry, I was getting kind of an allergy attack. I'm hoping I don't start sneezing. All right, CoinDesk today highlighted that there was no U.S. Bitcoin reserve plans as White House touts crypto report. Now, what this is essentially saying, we have a Bitcoin reserve, right? It was established, and we're looking for more clarity around that and what that looks like. Now, the president did come out and say, hey, we're not going to buy Bitcoin flat out with taxpayer money right now, but we are going to do is hold what we've confiscated, and we don't plan on selling it. So there was a White House 163-page strategy tackling U.S. crypto policy, and it didn't yet detail how the government will pursue its crypto stockpiles that include the so-called Bitcoin Strategic Reserve. Now, I'm going to go back and read 163 pages. It's going to take me a bit, but I want to go and look at that, and this article links off to those actual documents. So if you have the time, I encourage, right, here's that link. However, a new law was passed called the Genius Act, and that basically gives the regulations around stable coins. And the bigger piece of legislation that's still kind of rolling through that addresses the wider crypto markets, known by the House as the Clarity Act, has cleared the House of Representatives, and it's on its way to the Senate. So I apologize in the past if I said the Clarity Act was already approved. It looks like it's still underway with the Senate. But the report, Trump's earlier call for crypto stockpiles, one is for Bitcoin and some of the other digital assets, and that only was covered in the last page of that 163-page report, and it really didn't say a whole lot of anything. So more to come, but I think the takeaway with this, it is a call to action by our leadership to address these issues. So they are working on those frameworks, they're working on those laws and rules, and I would think under President Trump's term, because he's highly invested in crypto himself, that this gets ironed out. Next up, Bitcoin increasingly viewed as a long-term investment. Now, in the early years of Bitcoin, it was crazy. Most people, I would say 99% of the public, didn't understand it. It's rat poison, according to Warren Buffett. And being one of the most successful investors in history, when you have him saying things like that, it people listen. But as time goes by, as institutional adoption rises, as the government start buying it up, as the exchange-traded funds open up, as companies start adding it to its balance sheet, the evolution is heading in a direction that's undeniable, and that's really the whole point of this channel. How do we profit from that? So looking at the ownership trends over the past decade, the number of investors holding Bitcoin for 155 days or more is now the highest level since 2015. So people are holding it. They feel comfortable with that, even with the volatility. Now, granted, we are in a rising environment. Stocks are hitting all-time highs. Meta and Microsoft just came out with earnings and just absolutely crushed it. And so, where does this rise end? It's really hard to say, but the Mag 7 are back on favor. Risk on seems to be grinding away, and if we have a future rate cut, that's going to amp it up even more. So if you're holding assets, real estate, crypto, Bitcoin in this case, in this channel, what else? Stocks, bonds, things of high quality that are considered assets, then you are going to do quite well. But there's always a turning point, right? The bull run doesn't last forever. I'm trying to find signs that it's going to deteriorate, but I just can't yet. Next up, Bitcoin treasury firms. Now, we talk about these companies buying up Bitcoin over and over again. Nothing new. I saw a couple more today, but I'm not even covering it. But what I am covering is companies are rushing to add crypto to their balance sheet, but experts warn it's a fad. Well, I don't have access to the rest of this article. It's coming from fortune.com. Here's what I'm going to say. I graduated high school way back in the early 90s. And I remember in 95, I believe it was Newsweek, dismissed the internet as a fad. So we don't always get these predictions right. Is it a fad? Well, Beanie Babies were a fad. Cabbage Patch Kids were a fad. We've had a lot of fads. But I see Bitcoin is solving a problem. And more people are looking at and considering it as solving a problem. And the problem is the ability to print unlimited money. That is the problem that Bitcoin is solving. So I would say the more adoption, the less faddish it becomes. And I got a guest here. Let me just point her out. Woo, yeah, she's just wanting some love, so we'll keep her here. Finally, how am I trading Bitcoin today? Well, I mentioned I sell puts against IBIT. I mentioned I sell calls, covered calls in most cases against IBIT. And the reason I'm capping the high and the low of that is those options deteriorate over time, and I just keep the premiums. Now, there'll be a point where I don't sell as many calls, and the reason is I think at that point we'll be exhausting our sellers, and I don't want to miss the rip up because I still think we have one coming. Now, are we going to hit 200,000 this year? 250? I have no idea. I'm not putting a price target. I'm not putting a prediction. All I can tell you is there's more and more adoption every day when I look at these articles. Now, we seem to be grinding in that range I mentioned. Let me go back to this quote. So from July 10th up to now, we've been grinding between 116 and 120, which is an extremely tight range. Currently, we are at, 117. We're in the middle of that trading range. Okay? And again, we seem to have these little drawdowns as people sell and possibly over panic a little bit, thinking it's the crash. And then we grind right back within 6 to 8 hours. I've been seeing it over and over again. And actually, you can see it in this chart, We went down, we grind back up. We went down, we grind back up. We hit the high, then we grind back, we go back and forth. We've done that, 1, 2, 3, 4. Imagine we're setting up for the 5th one, and we're going to continue to do that, in my opinion, until we exhaust the sellers. So how am I taking advantage of that? Well, a product I have not mentioned in the past, funny enough, tied to somewhat Berkshire Hathaway, what is this? This is Omaha, OMAH. Now, they do, a professionally managed fund is essentially doing what I'm doing in a lot of ways with options to generate income. And so they've been generating this is a new product, but they mirror what Berkshire Hathaway is doing it, but they essentially sell calls against the fund, the individual holdings of the fund, which are similar to what Berkshire Hathaway is holding, to generate income. Apologize, it's extremely distracting. Let's dig into here, because I want to show you something really cool. If you go into Yahoo and you go historical data, you can pull up the dividends it's played over time. So you pick the time frame. I'm going to go back a year. This fund hasn't been open that long. It's only been open for about 4 or 5 months. And then instead of historical prices, I'm going to pick dividends only. And then you can see when it was released in March, it paid a 25% dividend. Or I'm sorry, not 25%. A quarter per share dividend. And then in April, May, June, July. So the goal is once a month to pay you income if you hold the shares, and for each share you're getting that. So I bought today, because it's on the lower end of that trading range, I bought 2,000 shares. So what does that look like? Let me pull up the calculator, if it allows me to, or I can just talk about it if it does not. Apparently I have too many things running, but essentially it was about 39,000 I invested. I hold it there. I collect that dividend. If IBIT pulls back, then I typically will cash out of this, normally at a profit. Not a huge profit, but it's just a place I park money until I execute on IBIT. And how am I executing on IBIT? Well, I'll sell some puts against it when it goes low. And if it continues to go lower, then I'm obligated to buy those shares, and then I cash out of my OMAH, because it tends to hold fairly steady and I get that dividend. So at one point, I think I had 6 figures of this. I was slowly cashing out as IBIT was low on the Bitcoin side. Cashed out of this at a profit, bought some shares of IBIT as well as sold puts against it, and then it rides up. I close those out and I shift. I kind of play back and forth. back and forth. Now, the only issue with this, if we do get the massive rip up, then I'm stuck in a fund that pays about 14% a year approximately, and dividends are incurred tax gains in the United States right away, depending on your tax picture. Granted, I'm not your tax advisor, so that's how I'm playing it right now. If you got questions, if it doesn't make sense, please put it in the comments, and look forward to tomorrow's Bitcoin news. Take care.